let's go to one other country, this time in West Africa, and talking about Ghana, where the citizens are going to the polls on December the 7th for a general election in which the incumbent is still in the race. Ahead of the polls, the markets in Accra are trudging on to the close of the year 2020 with a number of developments. Let's bring ourselves up to speed with the Chief Executive Officer at Apakan Securities Limited. Frederick Duvor is joining us from Accra, the country's capital. Good evening, sir, and thank you for coming on the show. We appreciate your time.
Hi, good evening, boss.
Fred, I'm sure election is all about what it is right now. But let's start from the market. Give us an overview of the market for the month we just finished, November.
Well, yields have been broadly stable in the fixed income market. Although market turnover in November declined by about about 30%. Yeah, on account of reduced market liquidity, and this was coupled with an increase in a number of primary issuances by the Treasury. On the stock market, however, bearish investor sentiments continue to drive activity, and the market index has dipped by 1% in November, bringing it to a year-to-date of 19.43%, which is even already worse than last year's performance of minus 12%. Financial stocks on the market have been hardest hit, with not a single financial stock posting a positive return this year.
Wow, that's quite. We'll get to that a little bit. But how much of the country's macroeconomic environment, inflation, exchange rate, and all of that, are they part of what's impacting the Ghana stock market on the negative side?
Well, the inflation and exchange rate haven't had an impact so much, to be honest. As we see, the secondary market fixed income yields have generally been stable within the past month, and exchange rate has also been stable, and this continues its impressive performance this year. Actually, it's the currency is probably on the course for its best performance ever recorded, which will be a great achievement, putting it into the context of the global effect of COVID on economies, especially in Africa. This year, the cedi has depreciated by just 3.15%, compared to depreciation of about 12% around the same time last year. We attribute this to a strong reserve position by the central bank, which allows it to intervene in the market from time to time to keep the currency in check. Inflation has also been trending lower for the past 3 months, and is expected to remain on its disinflationary path in the short term. So the equity market hasn't really flinched in reaction to the relatively low inflation, as equity investors have remained bearish from beginning of the year up until now.
But what about the political landscape and the markets as we see the election, general election draw very close?
Well, so as we all know, Ghana has a good track record of peaceful elections for the last 30 or so years, and it's indeed seen as the beacon of democracy in the region. We have conducted about 7 elections since the new constitution in 1992, and we have had power change hands about 3 times between the 2 major political parties. So with the yields remaining stable in the market, I think the market expects a fairly conducted election and a smooth transition if there should be a change in government. We also have not seen a significant sell-off by foreign investors, which also goes to suggest that the investors are confident that they're confident in the electoral process, and do not have Ghana political risk high on their radar. The election has thus not greatly affected yield levels. But this notwithstanding, some investors will also adopt a wait-and-see approach within the next couple of weeks before taking any new positions or increasing their Ghana country exposure.
So if we go back to the your comments earlier about why some of the banking stock haven't really made any significant gains this year. The SEC has announced some form of bailout for financial services companies whose operations were shut down months ago. Tell us more about this, and would you say this has been part of the constitutive factors of the weakness in the equities market?
Well, the listed financial stocks are really of banks that are governed by the central bank. But a couple of years ago, the central bank and the Securities and Exchange Commission together embarked on a financial sector cleanup to sanitize the financial sector. So the Bank of Ghana conducted its cleanup on the major banks, on the banks and the savings and loans and microfinance companies. And as part of the financial sector cleanup, the SEC also in November 2019 revoked the licenses of 53 fund managers. However, since then, the licenses of 3 of them have been restored, and 4 of them have also taken the issue to the courts for redress. So the bailout that was announced covers clients of defunct fund management companies whose licenses were revoked, and they are due a payment of up to about 50,000 Ghana cedis, which is circa $8,500, pending the outcome of the liquidation petition. So because the liquidation petition may take some time to resolve, the government thought it necessary to be sensitive to the plight of its citizens, which has been compounded by the impact of COVID. And it is in light of this that the government has given this payout of 50,000. So generally, the general performance of the banking stocks on the market, one can attribute it partly to the major cleanup that has been going on, but it is a general stock market bearish investor sentiment towards the stock market.
So I'm going to ask this question. Why are investors in Ghana generally bearish? Is it about the depth of the market? Is it about the availability of tradable instruments? Or is it the fact that folks just don't really bother about stock market investment?
Well, there's actually a cocktail of factors. As you know, over the past 3 years, last year the market returned negative 12%. The previous year, it returned minus 0.4%. So the market hasn't really been doing well. This can be attributed to the low level of liquidity in the market that becomes a disincentive primarily for foreign investors, because when they come into the market and they want to exit, they tend to find it difficult. And also, we've had a very high interest rate regime in the fixed income space. So you find that investors tend to prefer risk-free government securities as compared to riskier equity investments, because yields have been around the 20 or high teens, early 20 levels, and investors have wanted to play it safe on the market.
That sounds familiar. That sounds familiar to Nigeria a year or 2 ago. That sounds familiar. We understand. We are now running around ground zero, and folks are complaining. Just a quick one, 60 seconds. The local media are reporting that there's a pension plan for farmers, which the government is putting together. This sounds like music to my ears.
Well, yeah, this is actually great news, and it's great news for the cocoa farmers. So the cocoa farmers pension scheme, it was launched yesterday. There have been conversations around it. It was launched yesterday, and it guarantees a decent retirement for cocoa farmers. The scheme is mandated by law, and it will offer the opportunities for the farmers to make voluntary contributions towards their retirement. While the industry regulator, which is Cocoa Board, will also make a contribution on behalf of the farmers. So it is.
That'll be really great, Fred. That'll be very great, really innovative. Thank you so much. I was born of a cocoa farmer, by the way, so I know what you're talking about. I worked on a cocoa farm as a child, so I know what you're talking about. Thank you so much. Have a great day, and congratulations to cocoa farmers in Ghana.